Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're talking about mastering the consolidations for the simple trade setups. Excellent question yesterday. Can I show how my process is before the right-hand side of the screen? And just coming back to reviewing the simple concept, I think traders are making this really overcomplicated. I'm coming to the screen each session. Each week, I'm looking at the high and low of the week. I'm looking at the high and low of the day. And then I'm looking at the consolidation. The consolidation near the high or near the low gives me my information that I need as to whether or not this market may be set up for a potential of a trade. And I talk about mainly trading gold and Nasdaq because inevitably the amount of volatility that's there's always 25, 50, 75, 100 pip moves. But I think traders are looking really too deep into things. I'm looking at taking trade setups that I can just get in, put size on, and get out and be done. And when that market moves 25, 50, 75, 100 pips, it usually happens fairly quickly. And that's it. I want to get away from the screen. I don't want to hang around there. And I know there's lots of people out there who tell you where it's going to go, and they've got all these fancy terms that they describe the market about and on all these behaviors, but I'm just sticking to a really simple process, and we're going to talk about that today and just reviewing again the timings. 8 to 11 p.m. New York Eastern Standard Time, 2 to 5 a.m. New York Eastern Standard Time, specifically 3 a.m. to 4 a.m. the London Equity Market Open. New York, 8 to 11 a.m., and specifically the 9:30 New York Equity Market Open. These are critical times. High of day, low of day. And we may be high of session, low of session because we're inside, but we have a market that is coiled or gone vertical in the U.S. session, for example, inside of the London range. That's a stop hunt within itself. It may be placing a high of the session in place or a low of the session in place, giving us a new reference point if you weren't already in that move. So when New York equity market opens, they may retest that extreme for a reversal trade, going against the traders that were caught in that first hour. Often that first hour can be the setup itself. So really important, again, to build your playbook and to know what you're looking for. In many cases, if the market is pumping up, pump, there's going to be a sell setup coming. Same thing for the downside. Double zeros and 50s. Now that doesn't mean the market can't go to 75 for a sell. That's 25 pips above the range potentially. That may be a stop hunt in itself. They may be locking in the high between 50 and 75 for a 50 pip move back down to double zeros or a 100 pip move. So important to understand not just getting in at numbers, but looking for the high or the low to be locked in, or if it's already locked in, is that a market moving back into that level to sell off again or to buy off again? And then time compression, just specifically understanding time rotation. End of 15-minute bars, end of 15-minute cycles, half hours, 45 minutes, hourly. There's a ton of information there if you pay attention to the clock. So a lot of traders will watch the first 15 minutes or 30 minutes of London. The market will reverse and take off, and they'll go, how did that happen? But if you understood time compression and we're paying attention to the time and the rotation, and they've gone to the high or to the low, and there's an engulfment at the beginning of the half-hour mark of the 15-minute cycle, you'll see that the trade was there and the market had already locked in the high or the low, and then the market just seems to fall away with no logical reason. And now you're forced to either chase the trade, or traders counter-trend that, believing that the trend is actually going in that direction, and they get smashed. So again, the pre-market setup, order flow, creeping trends can give you a good indication of where a market may be headed, because that creeping trend will often be order flow getting traders into the market. And then the reversal of that falls straight through that. We've heard the expression, up by the escalator, down by the elevator. So again, if there's news, I will wait till after the news. And then, again, just identifying the trade type. Where are we at in the weekly template? We'll look at an example today on gold, Nasdaq, and we'll look at some examples of the euro yesterday, low of the week, high of the week types of setups, but again, specifically at the timings. But it's about understanding the consolidations. If you master the consolidation, then you can have a thesis. Are we up high? Have they triggered breakouts? And now we're, they've triggered longs. They come down to the bottom of that consolidation at the timing window for an entry after they trigger shorts and hit stops on the first mouse. Little things like that. And just looking at the euro yesterday, we talked earlier in one of the earlier videos about high of the week, low of the week opportunities. Right off the beginning of the week, this is Tuesday. Again, the pink line delineating our Monday high-low. We close through the low of Friday at the end of Monday's session, and they go lower in the pre-market through the Monday's low, so we're at the low of the week, and they put a high in place prior to the Asian session. So when the market opens in Asia, and again, I don't trade the euro very often, and if I was going to trade it, I'd be trading it in the London session. That would be the main time frame for me to first look at, if not, again, the U.S. session. The market proceeds to make a new low in our 3-hour window, so we draw our low down at the bottom. Now, the question I always ask myself is the low or high possibly locked in for the session? Now, being at the low of the week and in the gap time, having this engulfment, we also have our lower high of the Asian session taken out. So we have a break in structure. Prior to coming to the pink window, though, I would move my high up above the most recent high of the Asian session before the Europe session begins. So before the Europe session begins, this is the high of Asia. And we have a low down in place that we drew earlier, but we have a higher low in the consolidation. The Europe window opens up inside, so I'm not at the high or the low, but the market proceeds now to work down and put a new low in place. It goes through the low of the Asian session that we put in place, and so we would extend our low. The market then comes back again, hits the low, and so I will lower my low. Now at this stage, I am looking at the market and saying, well, we're going lower, but we're migrating around the low of the day. We're down low. My high is up here. This is now, to me, potential order flow, creeping trend. They've dropped it down. That's a giveaway. They've dropped it down first, and now they're getting traders to sell into the low of the day. In the last 15 minutes, so again, first thing I look at is where's my first 15-minute low, and that's right here. The market breaks that low. So again, if I was looking at the 15-minute chart, I would start my count. 1, I'd be looking for a 1, 2, 3 down to the low. We're down low. We've taken out the previous day's low. We're at the low of the week. My thesis is we could be putting a low in place. Now again, a 1, 2, 3 on a 15-minute chart is going to be at least 45 minutes. Now this started in the last 15 minutes of the hour prior to the 12 candle window, so then I'm thinking maybe we're going to get something around the half-hour mark. We get a low put in place in that third 15-minute bar of the first 12 candle window of Europe. Now, this move up gets traders caught in the breakout trade. This breakout bar right here. We have breakout traders now in long, but London has not yet opened. Now you'll notice this is 1 push, 2 pushes, 3 pushes up, and an engulfment. Now there's traders shorting this market down into the low of the day and the low of the week on the London Open. The London market opens right here on this little bull candle at 3 a.m. New York Eastern Standard Time. So we have a lower high inside. Now this has merely gone up to the high of the 12 candle window. But now you'll also recognize that we have volume getting trapped underneath of this neckline. We have our high up top. We're down low. We're at the low of Monday, at the low of the week. You have to be thinking about all these scenarios. Now this is the perfect setup. We have a break in structure. We have a lower high put in place. They're getting traders to sell it down into the London Open. The market engulfs at 7 minutes into the open of the London session. That's halfway of a 15-minute bar. Now, when I see this, I'm automatically thinking pin bar on a 15-minute close. So, traders, if you're looking at stuff and you're not sure, you're scared, you have FOMO, when you've seen this enough times, it's about the timing, time compression. There's your low. They've put the low in place. They've worked it in 3 pushes. They've had a breakout of a smaller geometrical structure, put a lower high in place, trapping volume down low, bang, London opens, engulfment for the explosive move up. Moves up through the double zeros to the quarter level, and for the year, I'd probably be exiting this trade, or definitely peeling off the majority of that trade once it gets to the quarter level. Now, in this particular case, because it's the low of the week, and we have a geometrical structure now, a rectangle, for the Asian high-low itself, it's possible this market could do a range expansion of the high-low of the Asian session, which in this case it did. Took it all the way up to 50 pips. Now, this is the importance of the high-low trades and also understanding the consolidations. This whole market was coiled down low at the low of the week, forming a high-low consolidation that brought traders into the low of the week before engulfing at the London Open and going vertical. So again, we have a market that stuck to the timings, high and low of the day, high and low of the week, engulfments at the low of the week at the open of the equity hour, and we had a range expansion of a geometrical structure for 25 to 50 pips. Now, if we come back and look at gold, and traders talk about the volatility of gold all the time, and again, I come back to the simple process every single time. If you have a consolidation, you're not trading on the inside. There's no volatility on the outside. The volatility is on the inside. So if you're patient and you're waiting, we have a break of a weekly high, monthly high, daily high, weekly high, the whole shebang on Monday morning that puts a high of the day in place. The market comes down and puts a low of the day in place. There were trade opportunities on smaller time frames to take this trade, but just in simple concepts, if that trade was not taken and we're coming to the Europe window, all I'm doing now is marking off where am I high, where am I low. Now, as that window tightens, the market proceeded to extend that low just prior to the Europe window. We have a lower high. There's my consolidation. There's my high. And in this particular case, I would be using the low of the previous day. We're down low. We don't have a low drawn. But we saw the W formation in that first hour on the 1 minute chart. We'll take a look at that. We have a market that made a low. They've already taken out the previous day, previous week's high. We're at the low of the week at the beginning of the Europe 12 candle window. Again, the same process applies. They put a low in place. I draw my line. We've broken out of the consolidation. We have a lower high in place. The market proceeds to make lower highs before the Europe window opens. So right up until this last minute, I don't have a new low yet. Bang, they lock in the low on the 1 minute chart. Now, I'm patiently waiting for them to give me a buy low setup. Bang, there it is. This small little bars in that 15-minute cycle in the second 15-minute, this is the second 15-minute bar. That little small tight range in the explosive move is a dead giveaway that this market is coiled now for an explosion back up. The other thing that is important to understand is how much has this market moved already. It's dropped 175, 200 pips. We have a market that's made lower highs. This is a creeping trend down into the low of the week. They broke out of the low. Most breakouts fail. Understand that. We also now have a smaller pattern within a pattern for a potential range expansion, even just within this session. My first target would be the high of the session and then be looking at these higher lows. Now, this market obviously had an explosive move. And again, if you've traded gold, keeping this simple, this is 3 levels of rise, 25, 25, 25. We had Europe put the low of the day in. London opens up inside and proceeds now to auction up and put a high of the day in. It puts a high of the day in. The next hour tests that high before locking in and giving traders a 25 pip reversal trade. Now again, for me, I'm in this trade up, I'm done and dusted. But I'm coming back to the simple concepts of consolidation. So even if you traded the 15-minute chart, this gave you a nice clean 50 pip trade. Now we talk about 1 bar stops. If I'm on the 1 minute, I get the explosive engulfment. I'm putting my stop at the bottom of that candle. If I'm on the 15-minute chart, there's my 1 bar stop. We go into the next session. I do the same thing. Where's my high? So I obviously have my high of the Asian session, but I have a high of that London has put in place. This is the London session still. We have a low that's been put in place in the London session. Now this is a pattern that you may often see where Asia has a large range or London has a large range on a Monday or Tuesday. Asia puts the high and London puts the low in, or vice versa. And then we have a market that opens up inside. Okay? This is a market that's opened up inside. I probably won't trade that market because I know that it's most likely going to be in a trading range, and I don't like to trade those. I want to trade markets that are on the outsides of these perimeters. We go to the next day. The same process applies. We break out of a previous day's high. They put a high in place. The market retests that prior to the Asian session opening. So now we have a high of the day and we have a low of the day that's put in place if you weren't trading the Asian session. If you were trading the Asian session, we have a market that is broken out of a previous day's high, 25 to 50 pips above the previous day's high. Average stop hunt is 25 to 50 pips. This high is roughly at 75. The market goes up through 25, but clearly reverses around that level on a smaller time frame. There's obviously peak formations in place here. But the Asian session itself is largely contained between double zeros and 50 with peak formation highs above the double zeros. We see the market just before the 12 candle window of the Europe session proceed to march up 25 pips above the range into the peak formation. 1, 2, 3 to the high. When we're here and we see this pin at 25 where the high has already been established, if you're not trading on the 1 minute chart and looking for that entry, you're at the high of the week, you're at the high of the month. This is a rectangle. They've now broken out. They've hit stops on traders that were short early in the session. We'll blow this up. The market proceeds up. Now this bull pin is important to look at right here. That's the beginning of the pump and dump. That's what you want to see. 1 push, 2 pushes, 3 pushes into the high engulfment at the half hour mark, right at the half hour mark into the high. So again, just marking off the highs. Time rotation, 15 minutes. We're into the second 15-minute bar. It engulfs and breaks structure, pulls back, consolidates sideways at the high before dropping down 50 pips. Now, London opens and comes right back up into that breakout. Breakout, pullback, engulfment again. So if you missed the first trade or you weren't looking to get in at the high, remember we have a neckline now just above that bullpen low. But when London engulfs, now I'm looking at the entire Asian range as a possible target. But because we're up high, there is also a high probability of a high-low range expansion trade setup for at least one full expansion of the range. So if you're looking to counter trend in a market like this, this is where traders can get smashed because this market could do 2 full expansions, and we have that potential if this market starts to roll over now with gold. We've gone up. We were at the high of the month. If this market proceeds to roll over, we could see some very large movement on the downside. So again, the consolidation is key. We head into the next session. The same process applies. And you'll notice for the traders that messaged me regarding the timings, again, the hour prior to the U.S. session, the market makes a peak formation low at the low of the London session and proceeds to march back upwards into the U.S. Open. So if you're inside or you're trading that U.S. market open, your mid-move pause, the first target's going to be taking out traders that are short in this consolidation. These peak formations are where traders have shorted that market down. Each selling block is lower and lower and lower. This consolidation on top of that lower rectangle, again, range expansion, has the potential for at least a full expansion of that range, which takes us back above, you'll notice, 50, before, again, reversing back. And this reversal trade happens at the half-hour mark. So 30 minutes up, hitting stops, vertical 50-pip move, and then a 25 to 40-pip move back against the trend at the half-hour mark after stops have been hit. We head into the U.S. session. That new high now that the first hour has made, you'll notice the equity market opens and goes vertical, hitting stops on traders that are short, coming down. Pay particular attention. Again, we're above 50, peak formation, 1, 2, 3, down sideways, engulfment, back inside, 10 minutes into the New York equity hour. All of this now back to at least the beginning of the session is potential order flow. This whole bull candle, bear candle, two-sided order flow trading into the high is a giveaway. They're going to go vertical straight through that. That market went 100 pips from top to bottom. Again, 50s, peak formation above 50, hitting stops, all the way back down, 50, 50, into the low not only of the U.S. session day, they've gone 25 to 50 pips below the range. So master the consolidations. It doesn't matter what market it is. If you're on the outside and you're looking for those opportunities, we're working from the high and the low of the day. The Nasdaq was the London Open, bang, all the way back up. That market had a massive day yesterday. High and low of Asia, okay? Right before the session started, they popped the high. There's our new high heading in, and they've made a higher low, but we have our low of the session down low. They locked in the low at the beginning of the day. We don't know that, but they came down 1, 2, 3. They made similar structure. This pin is a break in structure on the 1 minute. The London session opens, and we'll take a quick look at that. Again, they drop it down into the low. Order flow down, creeping trend sideways. Small geometrical structure at the low of the day, at the low of the Asian session. Breakout pullback, break in structure, little bar, engulfment, first entry. If traders don't want to take that, when they break higher and pull back, second entry, anywhere in here at the numbers. Breakout pullback. We've now broken structure. We have higher highs, higher lows. So it's as simple and complicated as you want to make it. We went 25 pips below 50. We've gone sideways. We've had a break in structure. London market hits the stops. They open up, engulfment, pin, hammer. This market now has a minimum target back to the high of the session and back to where that lower high of Asia was made, the break in structure. That's our initial, where that whole order flow started downwards into the session. First hour put a low in place. They take out the stops, trigger breakout traders. We get a break in structure, creeping trend back down into the London Open, engulfment for the explosive move. First 15 minutes takes out that whole lower structure, closes as an engulfment on the 15-minute, and explodes vertical and doesn't come back. We have a geometrical structure now that gave us a range expansion, low of the week trading opportunity that continued into the U.S. session before coming back after the New York market opened and went to the high. You'll notice they got traders who were short on Monday up top. They came all the way down and got traders that were long from the London breakout session down low, and now we're inside. We're inside of the high and the low of the week. This is the type of market that I will let trade and set up over the course of a couple sessions unless Asia breaks out. Right now I'll leave this market alone because we're inside. Same thing applies to gold. Still high and low consolidation. My thesis on this, and you'll notice that the consolidation gets tighter and tighter. We're inside of the high and low of the week. It's a Wednesday. We're inside. Again, narrow range. I'll leave this market alone. This to me is where the danger zone is. You can get chopped up. I want to see this market move vertical to a high or to a low, or have a range expansion where we start to approach one of these previous highs or lows from the U.S. session. So master the consolidations. Keep your trade setups super simple. Come to the screen, take the trade, 1 bar stop. Tight, keep your risk tight. If you have trade confirmation, for me, I'm going to add into that trade. I'm taking profits off the table, and you can see why. This market will come back. Every market will come back, and make sure that nobody gets a free lunch. Have a great trading session. Keep it simple, traders, and may the markets
Hi,
go
traders. It's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.